Welcome to TMS Insights, and it's a welcome to 2018, our first video of the year. Jeremy Hook and Ben Clark bring you some news from what's been, as typically the case, a quieter period for the market, but a good early start to the year, Ben.
Yeah, it's been fairly encouraging. There's been the bond market's been moving around somewhat, but as you sort of said, there really hasn't been any announcements from companies that we own. I think maybe one or two, but that will all change in the next few weeks.
That's it. So I think our market's put on about 1.5% this year to date, while, as Ben mentioned, a couple of rather substantial moves in important markets, bond and foreign exchange markets have gone on. Let's look at those briefly, Ben, because it does give us a bit of an insight to what might be coming in the year ahead. And we'll get on to talking about the reporting season in just a moment. So let's look at the bond market. There was definitely a sell-off that came out of the US and impacted here as well.
Yep.
Our 10-year bond yield's up to about 2.84 at the moment.
Yep.
That's actually quite a move. How does this impact altogether?
Well, it's quite a big move, I think, over the Christmas break, and I still think what the bond markets do this year will hold the key for what equity markets do, because probably the biggest threat to the equity market is that interest rates start to rise at a much faster pace than we were all expecting them to, as the US stimulus really starts to hit their economy. And with that, we saw a pretty decent sell-off in bond proxy stocks. So the infrastructure stocks and the property stocks all came off. And, I think there's some buying opportunities, and still maybe is in a couple of those at the moment. And where we go from here, well, it will all depend on some pretty important inflation data that comes out in the next couple of months. Inflation, something we haven't seen really anywhere in the world since the GFC. And there are maybe some little signs of some green shoots happening there. So we'll be very closely watching
that. Now, currency, when we last did a video, I think the currency was about 75 to the greenback. It's now closer to 81.
Yeah, it's amazing.
There wouldn't have been an economist in the country who would have expected that. That will be a handbrake to some earnings if it remains that way. A large part of the Australian market represented by companies who earn money offshore.
Yep, absolutely. I think, as you said, it was so unexpected. I think if you took a poll, most economists were calling the Aussie dollar lower at the end of last year, and it's risen 6 cents in 3 or 4 weeks. So it's quite extraordinary. It surprises me that the US dollar is so weak when they are very clearly going into an aggressive rate rising cycle. But it might also put off an interest rate rise this year from the RBA, because they'll be looking at that and won't be happy. And if we went into a rate rising cycle here, I think you might see the Aussie dollar move even higher. So it's interesting times. I don't think it's had a huge impact on the equity market at this stage, but I think there's this feeling it's not permanent.
Yeah, definitely. We said there weren't a lot of announcements. There was a surprise announcement from a company that we spoke about late last year on the videos and to clients, and that was Domain, which was a late listing in 2017. And very surprising to see the CEO, Anthony Catalano, resign last week.
Yeah. Still don't quite know what to make of it.
Personal reasons were offered, and the travel, etc., with
8 children,
young family and all this. But he'd been regarded by fund managers as a key part of the management team to go forward. So disappointment expressed by a sharp sell down.
Yeah, and I think, at a very quiet time of the year, it sort of exacerbated the sell down in both Fairfax and Domain, which now have nearly recovered to where they were post that announcement. But look, it is a surprise. I mean, Anthony, I think, really was the architect behind spinning off Domain, and then spent 6 to 9 months going around fund managers and selling his vision on what he would do with that business over the next 5 years, and then to sort of quit after 2 months is weird. But the trading update that did accompany that announcement was very solid. 22% revenue growth. I mean, the Domain's probably tracking at 30% plus profit growth at the moment on those sort of revenue numbers. So I think the comfort that we and clients can take out of that is that the business is still performing as we'd hoped.
And we hope they do a better search for a CEO than Commonwealth Bank did, who announced just yesterday that Matt Coman, who was head of their retail division, would now be running the bank after Ian Narev. Really quite surprising, Ben, that somebody who would be part of the architecture of the Austrac investigation was given the keys to the top job.
Yeah, look, it's another strange one. I guess the market sort of actually pushed the share price up, on the day that this was announced, and there's that view it's a safe pair of hands. But I think there is an argument that it's not the shake-up that potentially our banks need. There's some pretty big threats on the horizon to the banks, and we've seen that they really have had zero participation in a pretty strong year last year. And although the yields are still great and they're very solid businesses, there's just not a lot of growth there at the moment, and it's hard to see where it's going to come from in this environment. So, but there's also the Royal Commission and all that sort of stuff, which someone's going to have to deal with.
Yeah, and that takes us to reporting season. CommBank is probably one of the largest companies to begin the season. That's Wednesday the 7th of February. We see some other companies reporting, but it really gets on in earnest, Ben, next week. It should have been a good year for the economy and therefore for reporting, but the question we'll be asking is, are expectations a little too high?
Yeah, and that, it's more about expectations than physical numbers. And, if you look today, we've seen Credit Corp, Navitas and Village Roadshow have had an update as well. All three share prices down 5 to 10%. So hopefully that's not a sign of things to come.
And two of them weren't great numbers. Credit Corp were pretty good.
Yeah.
It's expectations too high.
Yeah. So look, I think it is going to be a strong earnings season. I don't think we saw really very few sort of confessions in that season leading up to it. But again, it's like, how does the market look at those numbers and think it's already factored in, and then there's a sell-off, or that's just something we'll have to wait and
it'll
find
be
out.
Individual stock prices will probably demonstrate the daily activity changes that could be wiped out the next day. We saw it with other stocks.
Yep.
Key stocks for you in this reporting season, what do you think are the ones that we should be watching most?
Look, for me, it's probably the growth stocks. I think because expectations are high and they need to deliver to warrant where a lot of these prices are trading at. It's very much a case-by-case basis there. We are seeing a kick-up in M&A activity. It started late last year and it's coming through again this year. So it'll be interesting to... But I think the general thing, Jeremy, is just hearing CEOs and what their outlook for the year ahead is. It feels to me like CEOs are getting more positive.
They're certainly demonstrating confidence in their spoken and the way they respond to surveys. So we expect to see that. We'll see at a granular level how that comes out with companies. And we will be bringing you 2 videos through the February reporting season. So we'll bring today's to an end and look forward to the updates in reporting season.